Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today a video came up on my alert sort of thing as a review. So I'm going to be doing a review of a stock that I had thought about adding to my portfolio in the past. Now I have two stocks that are very common to this one. I own AT&T and Verizon, and these are long-term holds. Now both of them I am currently up. I invested at great times. They offer, AT&T has Time Warner merging with it, or they're buying into Time Warner. They are starting to do satellite direct TV, different promotions for their phones, and having direct streaming to their devices through the AT&T service. Verizon is doing this, they bought Yahoo, and they have a couple other little things in motion. So both of those companies had things going for them in the future, so they were great investments in the long term. Now CenturyLink, which is the company that I'm going to be taking a look at today, ticker symbol CTL. At the time when I was looking at it, was back, let's see here, it was this year, and I had looked at it sometime after May, so probably in the June range when I started moving my portfolio into Robinhood. I did take a look at CenturyLink, whether it was a buy or just sort of an ignore. Now at the time looks like it was maybe in the $25–26 range, and you could see that its yield was down at 8.25%. So looking at the chart, you could see that at the time, yield to price, it was overvalued, and it had a really high PE ratio, whereas AT&T and Verizon did not have a high PE ratio. They met my kind of my strategy. I always like to buy stocks that are around or below 25. I prefer stocks that are below 25. I take a look at the industry, and then I compare whether that stock to industry is really great or not. So now CenturyLink actually dropped a huge amount this week, down 12.5%. So let's go over here and look at the 5-day loss. 12.23% in a 5-day period. 1 month period down 17.48%. Now one thing to take a look here is that their low is 18.41. Now if you were to invest right now at $19.16 and their low is $18.41, and it were to drop to $18 and I did times 9. Let's just do another times 10. I did times 10 instead of 100. Okay, so I took 916 minus 1841 divided by 1841, and that got me 0.047 or some along there, and then I times it by 10 and times it by 10 again. So if you were to go down to $18.40, that would be a loss of $4.07%. So not a huge loss. Not a huge loss if you were to hit their low, but they have a difference for their high of 52 at a much higher. So let's see here. 1841 was their low, and it doesn't actually show that it's their 52-week low, but that is their 52-week low. So let's just go back and take a look at this chart again, just really quickly. They currently have a dividend yield of 11.27%. That is huge. Never in history has CenturyLink been at 11.27%. They are currently worth $19.16, where in the past, just in 2017, their highest, or 2016 November, they were at $30.63. That's a $10 difference. So basically a 50% difference right there alone, all within 9 months. 9 months it took them to drop 50%. So that is a big loss, but can they recover? Now, if we take away the dividend here, we can see that their stock does do a lot of swing. You can see that their price was way high up, then their price swung down, and it does a lot of swinging motions here. So right now it has been on a very long downwards trend down into the $19 range, where the yield shot up to 11.27. Now, can they continue to pay out this yield? Well, that's what we're going to be taking a look at. And is it a long-term buy and hold? Now, I don't think it would be a buy and hold for the long term, so it might be added to my portfolio for a quarter or a year at max, just till I can see a recovery. Now, they do have some recovery periods here. Let's just say in the year, they had a period here back in October of 2016, so that was their highest point. And then ever since there, it's been kind of trending down. And you can see, okay, it's actually a loss of 38%. So I was a little bit off in my math. I said about 50%. So it's about, we'll say 40%. So I was a little bit off. Their price to earnings here show 27.73, and their yield shows 11.27. When I looked at Yahoo Finance, their PE ratio over here showed 18.78. So they may have been 27.73, their price to earnings, when it was $23. Maybe they only update this every month, but they went down $4 or 17% in the last month, and that would affect their price to earnings ratio because their price dropped by $4. So this actually seems more reasonable here. PE ratio of 18.73. You can see that they didn't meet their earnings for the past 3 quarters. Now we're going to have to take a look at what they have planned for the next quarter, so I will have to sit and listen to their earnings call. What kind of what do they have going on for their future. So I always like to listen to their earnings call. It only takes about 45 minutes to an hour, and just kind of listen in, see what they discuss, see what they are trying to turn around in the company, and what they have planned for the future. What they have. You can also check out their investment website, and we'll go ahead and look at that here in just a second. So earnings per share is $1.02. And see here, so their ex-dividend was in June, which means that they pay out in let's see, 2, 4, 7, and 10. So the next payout is in October, so their next ex-dividend date is in September, which is next month. So I could buy and hold up until their ex-dividend date just to see how it plays out, and I could get this nice payout of $2. What is it here? So if it's $2.16, 216 by 4, it would be 54 shares, or 54 cents a share. So say you bought, we'll say this is 20, and that's 5 shares for every $100, and for every $1,000, that's 5 and 10 is 50. So if you were to buy 50 shares, you would get a payout of $27 each quarter, or $108 for the year for investing $1,000 in the CenturyLink. That's a pretty good return. Again, yield is 11.27, so a 10% return with $1,000 would be $100. So this is a little bit over $100 because it is a yield of 11.27. And that's off because their actual price is $19.16, not 20. So anyways, continuing on, I get sort of sidetracked. Let's see here, dividend date, we already covered that. Payout ratio, this is incorrect. This says 313%. I don't like to use Yahoo Finance for my payout ratios. I always like to go over to dividend.com. 5-year dividend yield 7.28%. We're seeing that we get a 11.15%. That's a difference of, let's say, 7 and 11. That's a difference of 4%. That's a really big difference. Now, one thing I caught really quickly on the summary page with their 1-year target estimate is $26.13. That's pretty huge. If they were to go up to $26.13 from their current price at 1916 times that by 100, that would be a difference of 36% in the next year. So if I were to invest in this company right now, in 1 year, if they met their estimate in the next year, I can make a return of 36%. But this is all, it's not very in the sand. It's not written in the sand. Or it is written in the sand, and the air can just blow it around and just kind of destroy it. So let's take a look at what else here. It's financials. Let's take a look at their balance sheet or their income statement. So balance sheet, let's take a look at their balance sheet. So current assets here, cash and cash equivalents has been rising since 2000. Let's go ahead and just take a look at this year and the past quarters here and why they didn't meet these 3 earnings here. So they didn't meet their last earnings, and let's see here. So total current assets So their cash and equivalents has actually gone up through the quarters. So where are they hurting? Net receivables. So their net receivables is kind of trending downwards. So maybe some of their subscribers, people that you would normally pay them, maybe they are unsubscribing and moving on to other subscribers. You can see that they were higher in 2016. They peaked out in 16. They kind of trended back down. But between let's see, between first quarter and second quarter of 2017, you can see that they sort of picked back up on their net receivables. Now, let's see, they are in thousands. So other current assets has been trending. Why is that line? So that's a pretty big difference. 631,000 to 2 million, and then 698,000. That's a pretty big difference there. So, you know, again, they've been putting in a lot of fiber in my residency. They came by door to door. Now, talking about what I know about CenturyLink, you know, I do know an employee of CenturyLink that is going out there and installing a lot of fiber. Now, they've been pushing really hard lately to increase their speeds because they've been one of those companies that have been fighting with Charter Spectrum. Now, Charter offers 60 megs for a higher price of like $65, and CenturyLink charges, I believe, $20 for 40 megs. Now, people normally, if they stream, watch Netflix, they want that higher data, you know, that higher cap. So they're willing to pay a little bit more. But CenturyLink is out there now installing fiber where it's direct between the box and your house. You're not having to split as you are on CenturyLink. So you're getting the full bandwidth. And that's something that they're pushing for. They came door to door. They're offering these new services. So they are putting a lot into their infrastructure. So property, plant, and equipment, you can see that their property, plant, and equipment is moving upwards from their first quarter to second quarter. It is moving upwards. Their goodwill is moving a bit behind. Their intangible assets, let's see here, other assets, long-term, other assets. Okay, now let's take a look at their liabilities. So accounts payable is trending. So they're getting rid of some of their accounts payable. So short-term, long-term debt. Their short-term and long-term debt is down a huge amount from the past quarters. Their other current liabilities is down also quite a bit from their past quarters. Their total current liabilities is down almost $2 million. So they are churning their liabilities. They're cutting down on their liabilities from the past quarters. Their long-term debt did increase by a huge amount. So they may have, just as we're talking about infrastructure, they maybe took out some additional debt in order to install and provide these new services at this new level. So they were pretty stagnant in the past couple of quarters, and maybe finally they started to get some infrastructure and started to build on what their plan was, and that added to the long-term debt that they can't pay off right away. So it did add on to it quite a bit. Just talking about what I would expect, you know, knowing a little bit about their company. Now let's see here, stockholder equity. So how much do they pay out? Let's see, common stock, they pay out $550,000 to their shareholders. So people are still buying into it, and they are paying out pretty much right around the same each quarter. Let's see, total shareholder equity. So total, their net tangible assets. See here. So it's not bad. It's not, it's not great, of course. It's in the negative, but at the same time, they were at 11 million, and then 10, and then 10, and it's starting to decrease slightly. This one increased a little bit, but the difference between these two quarters was that they took a huge long-term debt right here, which brought down their net tangible assets quite a bit for this last quarter. But this isn't going to be marked down this will continue on to their next quarter. but I'm sure, now that they're kind of churning this around, they might end up actually with some higher net receivables in the next quarter, which could um, increase their net tangible assets in the next quarter. So again, thinking ahead, I do predict that they will match, I think that they will beat their earnings. So we'll make a video again in October, and we'll take a look at this company in October 30th through November 3rd on whether CenturyLink made or did not make their earnings. Now over here to Reuters is another website I like to use. Now we can see down here that their current PE, this one's showing is 27.73. Now that may or may not be correct. Again, there's so many different websites that track their PE ratio. This one says 27.73, this one says 18.78, this one says 27.73. So quite a bit of difference there. We can see that their industry is 22.21 and their sector is 27.88. So they are underneath the sector for their PE, but they're not underneath PE for their industry. Let's see here, their dividend 54 cents, so that is nice. Market cap 10 billion. I believe that's in the millions. Yeah, okay, millions. Million right there. It says right there, million market cap. Very nice. Let's see here. Okay, so we can see that their competitors are AT&T and Verizon, but in reality they're not too much competitors. CenturyLink is a big telecommunications provider and services with internet, fiber, and let's see, what's the other one, phone and such. So over to dividends.com, one thing that stuck out at me right away was their payout ratio. They're currently paying out 107.5%. Their earnings per share is $2.01, so that is pretty low. Again, they have had no dividend growth in the last year or several years, and that's something that we're going to take a look at here. So their average trade volume is 23 million, so that's nice. Good trade volume. It's over 500,000, which is usually what I like to shoot for, and this is way over 500,000. They haven't had any growth. We just talked about this. Now, something I saw here is they have been paying dividends for a long time. Now, it was very small dividends as they were probably building up their company, and then they shot up their dividends from 7 cents a quarter per share to they had a special just kind of payout of 63 cents and then continued paying out up until 2013, where a lot of these companies in the telecommunication field that were paying out dividends cut back their dividends. So they went from 72 cents to 54 cents. So that's a pretty nice cutback right there. And they haven't continued increasing their dividends since 2014. We'll say 2014. They haven't increased their dividend, but they haven't cut it. Now, during times of recession, we can't really look at this graph and see whether they cut back on their dividends during recession periods, because 92, there's no data for that. Let's see, 2000, they didn't come back on their dividend, but at the same time, they weren't paying out very much. Looks like they increased it there. 2008, they didn't cut back, but again, look at how low it is, 7 cents. So I don't expect them to cut back too much if they did have a recession, but at the same time, let's see here, they're 3, 6, 9, 12. So they actually pay out next, and looking at the chart, oh, it is, okay, yeah, so their next one is in September. So their ex-dividend date is normally in September. So September 2nd through the 8th, we can expect their next ex-dividend date to sort of pop up. Now, we can check out their investor relations, and this is always a good thing to look at. They have right here on the right hand side, they have their quarterly earnings, and if you want to go in here and look at their past calls, you can take a look at their webcasts, their earnings release and tables, their earnings supplement, and their presentation and transcript. So taking a look at their transcript is always something nice to take a look at. I won't cover any of this right now because it's just going to cover a lot of information that, talking about in a video it's going to make it way too long. So these are all useful information. To pauloffdividend.com, you go all the way down to the bottom. They have the main company's name. They always have the investor relations page, and they have their SEC filings that you can look up. But it is always important to take a look at their past earnings call and listen in on these things, because a lot of times the CEO will talk about what their next step is and the company, what they're planning for the future. Now, I know it was one of these. Talk about their guidance, how they plan to offset the expected declines, and talking about the excluding approximately 50 million collateration revenue. So, it just goes on. There's a lot of information you guys need to research. Now, I'm going to be digging through this and continuing on and reading and deciding for myself. I still have Sunday to kind of research this. As this video is being released on Sunday, I'm going to be taking my time to really read through CenturyLink, look at their future. Do I think they're going to be profitable in the future? Do I think they will meet their expected earnings in the next quarter? I know myself that they're doing a lot of infrastructure work. I have a friend involved with CenturyLink that's doing a lot of fiber work for their company. So, being myself in the telecommunications field, I do believe CenturyLink is going to be around for a long term. They're not going to go anywhere. They have themselves a nice little field, and no one's going to go in there and burst their bubble. They might get bought out, but that would just shoot up their price in the future. If somebody did buy out CenturyLink, such as Verizon as an example, or Time Warner, AT&T, their price would skyrocket. And at the time, I would be a nice gain as well. So that is it for this video. Let me know whether you think CenturyLink is a buy right now, or if you're holding it. Are you going to continue to hold it? Did you sell it off? Or do you think it's going to be a dead-end stock that's just going to be a value trap, where you're going to put your money in, you're never going to get it back, it's going to continue to decline, it's going to break its 52-week low of $18.41. Again, 1916 to 1841 is a loss of 4%, whereas 1916 to 26 is a gain of 36%. Tell me what you think in the comments, what you think CenturyLink will do. We'll make another video on CenturyLink after the next quarter, after the next earnings in October, and we're going to take a look whether the stock met, or did not meet earnings. So that is it for this video. Hopefully you have enjoyed it. Of course, I do make financial, stock market, investment screening videos daily, so do consider subscribing to my channel. If you have any questions or want to say hello, if I missed any of the information that was vital to whether this is a buy or sell or hold, go ahead and let me know in the comments. Again, I am not brand new to investing. I got 2 or 3 years, but as far as screening dividend stocks, I was a growth investor, and I like to invest in profitable companies. Maybe not all the time profitable, but this is sort of dividend investing is sort of a path that I really want to take. And this isn't a long-term buy and hold, because obviously they don't increase their dividends. They do pay out a large amount, but can they continue to pay out that amount in the future? Probably not. So this may or may not be added to my portfolio for the long term. It could be added for the next 1 to 5 years to see how it kind of turns out, whether they'll be bought out. So again, if you have any questions, please leave that in the comments below. Thanks for tuning in, and I will see you next time. Bye.